In this video, I'm going to show you 5 differences between a review engagement and an audit engagement. The first thing we're going to look at is the purpose. So the purpose of a review engagement is to review the financial statement and provide an opinion as to whether the financial statements are free from material errors. While in an audit engagement, it enables the auditor to express an opinion. Okay, so remember, here we are expressing an opinion, here we are also expressing an opinion. Okay, but the major difference is that here is just a review we are performing, we are not actually auditing. But here we are expressing an opinion, but we are actually performing an audit. So that is the first difference, the purpose. And number 2, we look at the assurance level. Okay, in the review engagement, the auditor provides a lower level of assurance. Okay, so whenever the users of the financial statement are making decision, they have to realize that it is just a review engagement, so they have to use the financial statement with caution. Okay, because it was not actually audited. Whereas in an audit engagement, the financial statement has actually been audited, so it provides a higher level of assurance to the users of the financial statement, and the audit report will usually be worded in a positive form. Okay, whereas in the review engagement, the report is going to be worded in a negative form, saying nothing has come to our mind to believe that the financial statement is materially misstated. Okay, so it's worded in a negative form, whereas the audit engagement will be worded in a positive form. And let's look at the third difference, which is the extent of work performed. In the review engagement, most of the work performed is going to be analytical in nature. And what do I mean by that? So we are going to be looking at variances, performing trend analysis, just trying to see, looking at the plausibility. Okay, we'll say, okay, last year revenue was maybe 1 million. This year revenue is like 1.2. That looks plausible, right? It looks reasonable. So we are just going to be performing variance analysis. We also look at expenses. General and admin expenses last year was 200,000. This year it's about maybe 50,000. Then that is not really plausible, because we want to know why is there so much difference. Okay, so that is what we are trying to do in a review engagement. But in an audit engagement, we are actually performing very extensive and detailed work. Okay, and most of the work that the auditors are going to be performing in an audit engagement is going to be substantive in nature. What do I mean by substantive? That is, we are going to be testing samples. Okay, we are going to be selecting invoices, testing them. Okay, so we are going to substantiate our samples to like bank statements. We are going to agree to invoices, to bank statement, and to various supporting documents. Okay, so you can see the work here is very extensive and is very detailed, while here we are just performing plausibility, reasonability. Okay, so we only go further when we realize that maybe a particular variance is not reasonable. Then in that case, we might want to go inquire further with management to understand why. So the fourth one is the fees. So when it comes to review engagement, the client is usually charged a lower fee, and I'm sure you will know why that is the case, because we perform less work. Okay, like I said, in review engagement we only perform majorly inquiry and analytical procedure. So in that case, the client is charged a lower fee compared to an audit engagement where we performed extensive and substantive work. So here the client is going to be billed a higher fee. And lastly, we'll look at the user's needs. Okay, so why would a company want to go for a review engagement or an audit engagement? That all points to the user's needs. Okay, for a review engagement, it's usually suitable for new companies, okay, or growing companies that maybe have limited operating capital. In that case, they might just want to go for a review engagement because they might not have the funds for an audit engagement. Or on the other hand, if it's a listed company, okay, or a company that is looking to go public, then they have to get an audit report. Okay, so in that case, the company has to opt for an audit engagement. So these are some of the differences between a review engagement and an audit engagement. Thank you very much for watching. I'm going to see you in my next video, and bye.